Alrighty, welcome back everyone from the Wall Street Silver community. We have a special guest with us. Today we have George Gammon. Gammon is an American real estate investor, entrepreneur, and a self-proclaimed macroeconomics addict. Is that correct, George?
That is spot on.
Awesome, awesome. We also have Jim Lewis and Lee Justo with us from the Wall Street Silver community. George, we have some questions. We're just going to get right into it. Lee, Jim, who would like to start?
I can kick this one off if that's okay. Now, your biggest thing is the Rebel Capitalist. You wanted to mention that. Can you tell us a little bit about how you got started with that and what your background is and how you got to where you are and so successful at being on a YouTube personality?
Sure. I retired. I was an entrepreneur for many years. I retired in 2012. And when I retired, I had a decent amount of savings, but not enough to where I could just draw it down and live the rest of my life with the same standard of living. So I needed to get about a 6 or 7% return. I'm not someone that likes to delegate my finances to someone else. I like to be in control of it. But I didn't know anything. I didn't know what a yield curve was. I didn't know what the Fed was. I didn't know what the bond market was, just absolutely zero. And I'd never owned a piece of real estate in my life, but I was in Singapore, and about 10 minutes before a dinner date, I stumbled across Milton Friedman's Free to Choose series on YouTube that he did, I believe, in 1980 or 81 on PBS. And it just really resonated because he was articulating all the things that I had had in my mind, not only as an entrepreneur and employer, but also as an employee, and kind of the life experiences that I had on both sides of the coin and the conclusions that I drew from those life experiences. He was putting into words and then putting into a video. So it really struck a chord, and I thought, wow, this guy is fantastic. And then I went from Milton Friedman to really studying Thomas Sowell, another individual that studied under Friedman, who's probably my favorite economist. And then I said, okay, well, how can I use this for investing? So that kind of took me down the path to discover guys like Jim Grant, like Jim Rogers, Mark Faber, Doug Casey, Rick Rule, Peter Schiff, Jim Rickards, and then some of the investing greats like Stan Druckenmiller. And I've read the Market Wizards books probably,
Yeah.
literally
Awesome
thousands
books.
of times. Yeah. On audio book and whatnot. So
Have you read Reminiscence, the Stock Operator yet?
I've got it on my audiobook. I've listened to bits and pieces of it,
Okay.
but I haven't listened to the whole thing from
Another
start to
classic.
finish.
Yep.
Yeah, exactly. And a lot of people, by the way, in Market Wizards reference that
Yes.
book. And I also
Yes.
reference blackjack, which is why I started playing blackjack way back in 2000, just to try to train my brain to think in terms of probabilities, which actually helped me quite a bit in business. But so I started trying, I came to the conclusion that the strategy that worked best with my personality is just an extreme contrarian and just buy things when they're super, super cheap, unloved. Nobody wants them. They're hated. I've always felt comfortable kind of being in that situation in my personal life. So it kind of worked well as an investing strategy. And at that time, real estate fell into that category. This was 2012. And in hindsight, that sounds like a genius play. But I can assure you, back then, when I told my family members that I wanted to invest in real estate, it was almost like a Alcoholics Anonymous intervention meeting, right? Where they they schedule us, you come in, they say, George, we got to talk some sense into you. This is the craziest thing you've ever talked about, and you're going to lose all your money, and everyone knows that real estate is in a bust and it's going to keep going down, and no one in their right mind would buy rental properties right now. But again, for me, that's a position that I felt very comfortable in. And it was, in fact, I referenced the chart that I initially used in that video that you were talking about before we started recording on the housing market. So anyway, that's what got me involved with real estate. So as an entrepreneur, I made quite a bit of money overseas. When I figured out the real estate game in the Midwest, this was 2013, 14. It's kind of a natural progression for me to look for higher returns outside of the US. So I went down to South America because now I started to understand macro a little bit better. And I thought that we were going to have maybe some decent inflation, and that baby boomers or retirees that were on a fixed income, their purchasing power would be pinched, and therefore they'd look for alternatives to increase their standard of living when they're retired, just living on Social Security as an example, or some fixed amount of money from their pension. And so I looked in Ecuador, and then I ended up investing quite heavily in Colombia, in Medellin, Colombia in 2015. That was because of oil went down below 30. I didn't know anything about oil, but I figured out that the peso was loosely tied to oil. And if I bought peso denominated assets, then hopefully I could get kind of a double whammy. So at the time I did real estate. So I bought peso denominated real estate and just kind of parlayed that into a team that I now have that's probably 20, 25 people that does this consistently, even when I'm not there. So 2019, we're doing all these properties, buying these unloved, ugly apartments in Medellin is what most of them are, these condos. And you find a motivated seller, but we're doing so many of them that I'm like, well, why don't we just do a TV show? Because these things are very popular in the United States, so why wouldn't they be popular here? I knew nothing about TV, but as an entrepreneur, you just shoot first and ask questions later. So I went down to the local TV station and I pitched them on this deal, on this idea of this gringo guy that really didn't speak Spanish at all, not only producing, but starring in a local TV show that was in Spanish with just subtitles.
They went for it? They loved it or what?
Well, initially they were like, yeah, okay, gringo, whatever. But they were nice enough to say, why don't you come back in 2 weeks with a demo reel, I think it's called, like basically 5 minutes, a little short of what you're envisioning. And if you can put that together, then maybe we'll talk. I got the TV show. We did 13 episodes.
Oh, that's
yeah,
awesome.
It was called Vida en Remodelación.
Wow.
Okay.
So the remodeling life, basically.
Right, yeah.
It was me. I was the real estate investor. Then it followed around my architect and designer, who are a husband and wife team, young couple, very charismatic. It was a great show. But then after we got done with season 1, then I had all these fantastic editors because I had to produce the show myself. The TV station did not produce the show; they just aired it. So I figured that out really quick, but I had all these great people and I didn't want to lose them. I wanted to keep them employed. And I always thought, it'd be a good idea to start a YouTube channel. So that's why I started the channel initially. And it was just about real estate investing because I didn't think anyone would want to watch a video on macro, but that was my true passion. I love real estate investing. It's a good way to make money, but I'm really, if you get me at dinner, I'm always going to be talking about macro. Those are the podcasts that I listen to. So we threw in a couple macro videos, and those actually were the ones that were popular. The real estate videos actually didn't do too well. So I'm like, well, this is a good fit. This works. This is a win-win because this is what I actually want to talk about. And then we, in a roundabout way, started doing whiteboard videos, which became extremely popular. And then the channel, I think, got to 100,000 subscribers in about maybe 8 or 9 months, something like that. Wow. Now it's almost 300,000. And back about maybe a year ago, I started a podcast where I was doing interviews on the YouTube channel, but turning them into a podcast. And that's what you referenced earlier, called the Rebel Capitalist Show. And now in June, we're doing Rebel Capitalist Live, which is an investment conference, not over Zoom, not Skype, actually live human beings talking to each other face to face, believe it or not. And that's in Miami, June 11th through the 13th. So a lot of the people are coming out that I talked to on the show, guys like Kiyosaki and gals like Lynette Zhang, Jeff Snyder, Brent Johnson, you guys probably know them, Mark Moss, and Jason Hart, McKen McElroy, a bunch of awesome people that are going to, I think, blow everyone away. But more importantly, you're able to network with a group of like-minded individuals. So we're looking forward to that.
Well, I'm based in Orlando, so I might actually come down for that just to see it live. That could be really interesting. So,
I was just looking at, I've just been actually looking at properties in Orlando because I went down to Puerto Rico to spend some time down there for ACT 2022. And it's just a complete, it's a police state there. It's like East Germany. There's martial law. and I want nothing to do with that. So I was there for about 24 hours and just hit the bid. I got the earliest flight out. So I came to Florida to try to find a little personal freedom and liberty, which I found a lot of in Naples. That's where I am right now. Naples is fantastic. I mean, very few restaurants or businesses here require that you wear a mask. They just make it optional, which is what I think the way it should be. Yeah. So it's really great here. But I was actually looking at Orlando for maybe after the event, getting an Airbnb, then maybe a 6-month rental there. So
I was saying here in Canada, they're doing it's brutal. You can't even go to a restaurant. They shut everything down. You have to eat outside with a mask on. It's brutal.
Yeah, you know what's interesting is here in Naples, I guess it's usually a pretty expensive area, but right now, I mean, my budget is pretty significant compared to most people's, to say the least. And I mean, it's very difficult to find an actual really nice property. And I was talking to my real estate agent about this, and she said, typically what happens in this area is people leave around March or April, then they'll rent out their property until like November. And so usually this is the down season. It's very easy to get a spot, but today the prices are still sky high, if not higher, because you have so many people from across the United States, in the world, flooding into Florida just to get some personal freedom and liberty. And I figured that, but what I didn't think about is no one is leaving. So in fact, I just tried to rent a place yesterday that it says, on the MLS that it's open. Then you call the agent calls and said, oh, nope, sorry, it's not going to be rented this year because they're Canadian and they don't want to go back. Yeah, seriously.
That's great. Yeah, I've lived here for years, and we've been a freedom zone since, our governor, Rick DeSantis, he basically said, put everything back to normal last September. He said, kids go back to school, business is open, everything's voluntary. He won't let the cities do any sort of retaliation. Even some of the cities that do want to be stricter, he's taken away through executive orders. He said, no, this is all going to be voluntary. We need to talk to our neighbors. We need to work with them. There's not going to be any fines. There's not going to be any of that going on in Florida. And it's been very, and I've traveled outside of Florida, and I'm like, why are people still putting up with all this?
Yeah,
and
exactly.
It's just shocked me. Hey, I want to share something on the screen, something you did on Twitter recently, if we could, George. This is does everyone see that?
Yeah.
So this is a question you posed recently on Twitter for your followers. Yeah, that I thought was really, it sort of made you think, it made me think and pause for a few minutes.
That's exactly why I did it. That's exactly why I did it. Most of the things I post on Twitter, it's hopefully to get people to think.
Yeah. So let's go through this, and I want to get your, you asked everyone else. I want you to maybe give us your thoughts on this. If you voluntarily wear a mask, when will you stop? And if your answer is when it's safe, how will you determine if it's safe? What have you gotten any great answers on this, or what's your own answer to this one?
No, I haven't had time to check it, but I'm leading people down the path, because if they take that to its logical conclusion, they're going to say, when the central planners tell me it's safe. Mm-hmm. And then you take that to the next step, and that's hopefully it'll dawn on people that they're delegating their critical thinking to central planners and politicians that have ulterior motives. And that's the point of that tweet, because ask any of your friends, that are wearing this. They say, well, you're going to, there's going to be some other strain, or there's going to be this, or there's going to be this. Well, how do you know that? Like, you're not out there figuring this stuff out. What you're doing is you're just choosing what central planner to listen to. And then you're just assuming that they're correct because all of your friends or the media is telling you they're correct, without actually looking into the research and seeing that there's a lot of different opinions out there. And go on the John Hopkins website, for heaven's sakes, and look at the statistics from state to state. And then you go in there and actually go to those states. A lot of people that push back on this idea, they've never been out of their state, such as California or New York or something like this. And they need to go to a state like Idaho, right? Because I'll say, look at the statistics, look at the graphs as far as Idaho. How can they be identical to California when you have almost zero compliance in Idaho, and in California you have a lot more compliance due to government mandates, among other things. And they'll say, oh, well, Idaho, yeah, they don't have the law, but they're probably just wearing the masks anyway. And in California, although they have a law, there's probably fewer people. No, 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 no. Go there yourself. I was just there. I can promise you, I saw with my very own eyes that there is almost a zero compliance in the areas where I was. And go to another place like Tucson. I haven't been to California, but Tucson, there's 100% compliance to an extreme. There's almost 100% compliance with people driving around in their car, for heaven's sakes. So how do you explain the fact that there's dramatic differences in actual behavior and what is safe and quote unquote unsafe, but yet the numbers are completely they're almost identical, but then there's no correlation. There's no rhyme or reason to it. Sometimes when they'll do a mask mandate, the numbers will improve. Sometimes they won't. Sometimes they do a lockdown. There's no consistency to it whatsoever. And in science, that means that's because there's no causal effect.
Yeah.
Is there any way we can get into the Great Reset now and your view on precious metals?
Sure. Yeah, you know, I had lunch Sunday in West Palm Beach with Jeff Snyder. And Jeff is kind of in that deflation. He wouldn't say deflation. He would say the disinflationary camp. And Jeff is the smartest guy I've ever met in my life. He's probably tied with Lynn Alden. They're right up there. I don't know any people that are smarter than they are. Not only that, but are better researched. They're literally like talking to a human encyclopedia. I mean, I go back 100 years, 200 years, 300 years on monetary policy in England, and they can just rattle off statistic after statistic. I mean, it's unbelievable. So Jeff has a very good argument for deflation. It'd probably take the whole interview for me to explain it. But then you ask him, you say, Jeff, do you own gold? Because someone that is a disinflationary mindset, let's say, they probably would own bonds, they'd own cash, you know, they probably wouldn't own gold, which is usually seen as an inflationary hedge. But Jeff says, absolutely, I do. You say, okay, well, why? This is because the monetary system, the global monetary system is broken. It's broken and it hasn't been fixed. He's talking about the Eurodollar system. It broke during the GFC or prior to the GFC, or that's what caused the GFC really. And it has never been fixed. It won't be fixed. And at some point in time, the house of cards has to just completely crash. And we need a new monetary system that will emerge from the ashes. He says, I own gold because that time when you go from point A to point B, it gets real ugly. And that's when you want to own gold and silver. But my point is that's kind of dovetails onto this Great Reset agenda that the World Economic Forum has been talking about for quite a few years. Actually, this is nothing new. And a lot of people, you know, when I first started talking about the Great Reset agenda, a lot of people labeled me as a conspiracy theorist or a tinfoil hatter. But now it's much more mainstream on YouTube and social media. But these are their words. I'm not making up.
No doubt.
You go right to their website and it's there in plain English. And they've got blog posts. They've got all of their strategies or the way they see the world forming. It's all right there on graphs, charts, these, I don't know what they're called, these diagrams that they always do, those circle things, you know, where they've got all these things stemming out from like some core. I don't know what that's called, but they're always doing these. And then Klaus Schwab, who's the head of the World Economic Forum, actually has done quite a few blog posts. And then if you just read a lot of their material and put the pieces of the puzzle together, you can pretty much see what their quote unquote agenda is and how they see the world. Now, how they're trying to get us from point A to point B is another topic of discussion. I think that they're using the propaganda techniques used by the Germans back in prior to World War II. Now, I'm not saying the word because we're trying to keep it YouTube friendly, I'm assuming, but you guys know what I'm talking about, which propaganda group. Now I'm not saying that the World Economic Forum or the IMF or the global elite is that group of people. I'm not saying that. All I'm saying is they are definitively using the same techniques as far as propaganda. And now whether they're doing that intentionally or unintentionally, I don't know. But most likely it's premeditated because it's kind of a specific process. So the process goes like this. First and foremost, you have to convince society at large to abandon critical thinking and rationale as their number one priority. That needs to be replaced by feeling. So why on earth are you guys worried about critical thinking and rationale? That at the end of the day, it really doesn't matter. What really matters is just how you feel. Mm-hmm. And that's what goes all the way back to Germany, 1930s. This is nothing new, but we see it really being promoted heavily over the last, call it 5 years, 10 years, something like that. And so that's number one. And then what you do is you have to get into the school system to start using this propaganda at a very young age. And then you have to start using the propaganda in media. And then you need a boogeyman. So we obviously know what the boogeyman was in 1930s in Germany. And then contrast that today. I don't know what their boogeyman is, so to speak, but you can definitely see what they're doing with the school system and how they're encouraging these ideas also in media. Now, a lot of, and Milton Friedman talked about this as well. If you've watched the couple episodes that he did with Donahue, I remember he referenced this specifically, where you've got two groups of people that are considered do-gooders. You've got the people in the front lines, and they're kind of the useful idiots, as Marx would say. And then you have the people behind the scenes kind of pulling the strings. And these are usually, he used the example of heads of corporations that really are just giving lip service to a certain social cause just because it benefits them, because it makes it easier to create a monopoly because of the government regulations. But I think that if you look at the World Economic Forum, and there's levels of these individuals on the front lines that Friedman said, or there's levels of useful idiots. Like Benioff as an example, Mark Benioff with Salesforce. I mean, he's like a Klaus mini-me. Every single thing you hear him say is not only right in line with the Great Reset agenda, but he even uses the same terminology, and he even demonizes the same people. If you look at the World Economic Forum, especially Klaus, the one person they always demonize is Milton Friedman. Always, always. And they always use the term neoliberalism as though it's this bad, evil thing. You know, whenever you touch neo to something, it just, for whatever reason, it conjures up a lot of negative emotions in people. And he knows that. So, but then if you actually look up what neoliberalism means, you're like, well, I like that. That sounds pretty good to me. It's basically free market capitalism. And then what they'll do is they're all socialists. They're all central planners. They believe, if you can just put two and two together, they believe that there's an intellectual elite in the world, which they're a part of, that really they get it. And all these, the rest of the 7 billion people on Earth are just too stupid to understand what they understand. They're just not enlightened. They're these dumb yokels and rubes out there that are just completely destroying the world and society and creating all these bad things because they're just too dumb to see the light. And therefore, we need to take all of the control and all of the power so the other 7 billion people don't ruin the world and don't ruin it for future generations because we're so smart. That's basically their underlying tone. Now, whether there's good intentions or bad intentions, I don't know. I mean, I'll leave that up to you guys to make your own decision. But it's all boils down to more control over the economy and society at large. So this parlays into what you guys were talking about with gold and silver, because one of their main thrusts is climate change. Now, again, I'm not going to debate that right here, but what they're trying to do to prevent climate change will completely destroy the economy from a standpoint of the creation of goods and services. And that's what people need to understand first and foremost, that the wealth in an economy has nothing to do with the amount of currency units. See, people confuse this. They think that if, as a society on an aggregate total, if we have more bank liabilities, which are just basically bank deposits, then somehow we're richer. That doesn't make any sense, right? It's about the goods and services. If you're stranded on a deserted island and all you have is a chest full of money, you're poor because there's no stuff for you to buy or consume or use. So we have to start thinking of wealth in terms of goods and services a society can produce efficiently, so they can produce more than they consume. But what happens with their initiatives, this will reduce the amount of goods and services. Now they say, oh, well, don't worry about it, because we'll just print so much money and governments can take on deficit spending and governments can fill the gap. But again, it's a focus of wealth being on a currency or currency units as opposed to goods and services. So if there's a decrease in the amount, a massive decrease in the amount of goods and services produced on aggregate total across the world, then that means that we are going to become poor. They're going to fill the gap. You guys know what the central banks are going to do. You guys know what the governments are going to do. Just look at the 2020 playbook, right? M2 money supply is going to go up by 25%. Who knows what it will go up this year or the next year. The central banks will monetize all the debt the governments are producing in order to, quote unquote, stimulate the economy. Well, this does a few things. Number one, it's great for Klaus and all of his buddies because of the Cantillon effect. They are closest to all the money printing. Therefore, they will benefit the most. They, meaning the political insiders and the financial insiders. And you can see this as plain as day with the $4 trillion stimulus package that Biden rolled out, what it was, a month ago or so. You know, only 300 billion or so, I don't know the numbers right off the top of my head, but it was a very low percentage, actually went to people, the average Joe and Jane.
What?
Yeah, people think that all 4 trillion went there. I mean, that's
no way. No.
Only maybe 200 billion. All the other trillions of dollars are just these, going to XYZ corporation and this corporation, this insider's buddy and that, they're saying, oh, well, we're going to build railroads and they're going to, give you a donation every single year for $1 million. It's just complete, it's craziness. So this is this Cantillon effect, which benefits these people that go to Davos. These are the global elite that I'm referring to. And by the way, that's put on by the World Economic Forum. So they're benefiting as a result. But when you have, this is a simple math equation. When you have the amount of currency units in the world going up significantly, and you have the amount of goods and services going down, you don't have to be a rocket science to figure out that means consumer price inflation. Now, we can have asset deflation at the same time. If you look at the 1970s, from 72 to 74, the stock market went down in nominal terms by 50%. And that was during a period of high consumer price inflation. A lot of people always say, oh, well, stocks are a great hedge against inflation. Yeah, maybe.
Yeah.
It depends on how bad the inflation is. If the inflation is hyperinflation, then yeah, you're going to have Gresham's law kick in. But if the inflation is 1970s, maybe not, especially when stocks are all-time highs. When you look at valuation metrics, such as the Buffett indicator, market cap to GDP, or you look at the CAPE ratio, it's by no means cheap. So you got a long way to go. I think they could easily come down in nominal terms. Who knows? They may come down just in real terms. But the point is, whether you're an inflationist or a disinflationist, or a deflationist, you've got to look at what's coming down the pipeline, whether it's the collapse of the monetary system or whether it's a collapse due to these this crazy agenda that they're trying to push through, destroying the supply chains, destroying free market capitalism, reducing the supply while they're increasing the currency units. That in any of those scenarios, you want to have a certain percentage of your portfolio in precious metals.
We've been talking about inflation and collapse of the dollar, devaluation of the dollar, whatever we want to call it. And then with the housing bubble at the same time, if the amount of money in the system is just exploding exponentially, I'm wondering how that ties in with your thoughts about the housing bubble collapse, but wouldn't that just lead to more and more of an extended housing bubble?
Yeah, but you got to first of all, you got to compartmentalize where you're talking about inflation. So the dollar against what, right? So the dollar can go down against other currencies on the DXY as an example, while it goes up against goods and services in the United States domestically, while at the same time it goes down against assets. You know, look at what the dollar has done over the last year against Bitcoin. That's hyperinflation. The dollar has lost, I mean, I don't know what it is, but let's call it 99% of its value over the last 3 years against Bitcoin.
Yeah.
Right? Or against certain.
I don't know if CPI is ready to include Bitcoin in its basket of goods yet, but we'll see.
Right. But you see, so first you've got to compartmentalize and say, okay, I want to look at the prices of stuff denominated in dollars, but what stuff are you talking about? Because they can move at different levels or different directions all the time. Another thing, you know, if you look at the stock market as an example, or the housing market, try to find some correlation between 2000 and 2021 with CPI. I mean, it's not going to really track it, or the DXY for that matter, or commodities. There's really no correlation, because the housing market has so much to do with debt. And those can be two different topics of discussion. So you've got to start with compartmentalizing that, and then trying to think through the probabilities of how the dollar responds to XYZ group.
Lee?
Ivan, you have a question, right?
Yes, I do actually. George, you had a lawsuit against basically to audit the Fed. Is that correct?
Yeah, we have one. Yeah.
You have one right now. Can you speak more about that and go into detail about that, George?
Sure. Well, we haven't sued them yet, because what you do first, we're going through something called the FOIA, which is the Freedom of Information Act. And this is something where you request documents first from the Fed, and they basically tell you to pound sand. And then when they do, you go back and you have to sue them. I don't know if it's suing the technical term, but you have to use legal action against them to try to have a court force them to give you the legal documents that you request. And a lot of people, you know, on Twitter said, "Oh, George, you're just, you know, this is a lost cause. You're just wasting money and other people's money." They haven't done the research, because if you did, you'd find that there's a couple Bloomberg journalists that have actually been successful using FOIA against the Fed to extract documents back in 2009 and 2010. I believe there's actually a few examples of that, but that's something that I went over with Robert prior to moving forward with this mission or campaign. And basically the genesis was back in 2020, I was looking at what the Fed was doing, buying corporate debt and junk bonds, and sure, they're setting up special purpose vehicles, but everyone knows exactly what they're doing, for heaven's sakes. They're bailing out the corporate bond market, and everyone knew that was a complete violation of the Federal Reserve Act. Everyone knew it, but no one said anything. The CNBC talking heads they don't even mention it. They just turn the other direction. People on Bloomberg, all these sophisticated people, they just, you know, they don't even mention it. They just turn their head the other way. They ignore it, and then if you push them, they're like, well, yeah, we know that it's against the Federal Reserve Act, but I mean, COVID, You know, like that's just the trump card for anything, right? That you can do anything because of just that word. But that's not the way the law works, right? The law is there to constrain the central planners, to constrain the individuals who have power over the average Joe and Jane during all times, not just times when it's convenient. It's like freedom of speech. You know, it's the exact same principle. The test of freedom of speech is not when people are saying things you like. It's when people are saying things you don't like. And that's the exact same with the Constitution. It's the exact same with the Federal Reserve Act. So I was having dinner with my good friend, Robert Barnes, who's a high profile constitutional free speech lawyer. He represented some of the Covington kids. He represented Wesley Snipes, against the IRS. He represented Alex Jones when Jones sued Twitter for kicking him off. And so he's got a lot of experience. I had dinner with him in Vegas, and I just brought up the idea, and I said, this is BS. This is nonsense. Someone's got to stand up and push back here, because if you continue to allow the central planners to completely circumvent the law, at some point in time, they're going to use that additional power against you.
Yeah.
That's the bottom line. Study history. That's the way this works. And we have to remember that we should be, we're straying away from it now, but we should be a country of law, not of men. And that is extremely important. We remember that and try to make sure that those are the rules that we are living by. And that's the type of country we live in. And so anyway, I said, is it possible to try to push back somehow? And he's like, well, you could try to use FOIA. And we started talking about it. So, one thing led to another. And that's why we set up the campaign. I wanted to kind of create a movement. And regardless of the outcome, I wanted to promote awareness of the damaging effects that the Fed has had since 1913 by trying to promote this inflation policy and how that destroys the poor, the middle class. It turns society into a group of gamblers and speculators. It makes everyone go further and further out the risk curve. It creates these boom bust cycles that just suck in all of the average individuals. And then when the game of musical chairs is over, the public is left holding the bag, and these big corporations and banks get the bailouts. And it's a big transfer of wealth from society from the real economy to the financial economy. That's basically what the Fed does, whether it's inadvertent or not. And so I want to make sure that there's awareness or more awareness. And I thought maybe this could do both those things. So that's why we pursued it. Robert said it cost about 100 grand for the first phase. So I put up the first 25, and then I set up a GoFundMe to really create the awareness and get people involved, where if they donated $1, I'd donate dollar for dollar. Wow. Whatever was put in above the 25,000.
Is that still an active GoFundMe?
No, we hit our goal in a little over 24 hours.
Oh, nice.
Nice. Congratulations.
So we stopped it at 62.5 because now I'll put in the other 37.5 that'll bring us up to 100.
Nice.
So go ahead.
You filed the Freedom of Information request, and you're waiting for them
We're
to tell
in the
you.
process of doing that. Yeah, we're in the process of doing that. And actually, Robert reached out to me the other day to contact all the macro people I know. I won't mention names, but you guys know the list of characters, to see if there's anything that they actually wanted.
Oh shit! Now we got to request something.
Yeah, right.
Oh, that's hilarious. Lee?
So I wanted, Ivan, why don't you just mention to George our GoFundMe campaign and what we did? I'm not sure whether he knows about it.
Oh yeah, George. So we started a GoFundMe to raise awareness for silver, to put billboards in the United States across 5 different states. We started with a goal the first day of just a simple $10,000. And then, we raised 113 in like a week or a week and a half. And now, and on the 3rd, we'll be going live. And then I think 25 million impressions it'll get just to raise awareness for silver, for precious metals.
Yeah, that's fantastic. And even more so, just teach people what money is.
This whole generation's been raised that fiat currency is how things are. And our grandparents knew that gold and silver were real money back a generation, 2 generations ago. And something's just happened where we've forgotten in the means since then. And we need to start that awareness campaign, especially with what the central banks are doing, devaluing the euro, devaluing the dollar. It's critical now that people protect themselves.
Yeah, and it's also, I think it's very important people understand the benefits to sound money and the drawbacks to fiat, in the sense that people just think, oh, well, it's inflation, deflation, but no. It can reduce war. I mean, if we had a true sound money where the government could not manipulate it, or the central bank couldn't say, oh, we're just going to ignore that for the next 4 years, it would drastically reduce the amount of war we have in the world, because the only way a country could go to war is if they taxed the citizens an additional amount, the honest way, instead of just print the money. And how many Americans would have voted for Afghanistan or Iraq or Vietnam or any of these wars that countless wars that we've been in, and other countries as well. But the U.S. is the biggest perpetrator for sure. But that would really constrain the ability to go to war. It would constrain the money printing, the inflation. Very few people understand the power of deflation that's produced by a free market capitalist society. And I use the example of a study I did in the late 1800s, where it's about a 10 or 15 year period, maybe 20 years, where they had 2 to 3% deflation per year, while at the same time nominal wages went up by 1% and GDP went up as well per capita. So I did kind of a real quick thought experiment, back the napkin math on what that would look like for someone that worked at McDonald's using today's dollars. So assuming they made $1,500 per month and their expenses were $1,500, so they were to break even, they couldn't save, just hand to mouth type of existence. And over the next 20 years, even if they didn't get a higher job or anything like that, using those metrics from the late 1800s, they would go from making $1,500 per month to $1,800 per month. Now, most people would say, oh, well, that's nothing, a $300 increase in your purchasing power over 20 years. But what they're not paying attention to is the deflation component of the price of goods and services going down, right? Therefore, the purchasing power of that dollar increasing. That person's expenses would have gone from $1,500 per month down to $800. So now, instead of just breaking even, they've got an additional $1,000 per month that they can use to invest or do whatever they want to with. And oh, by the way, that $1,000 has even more purchasing power than $1,000 would have at the very beginning of the thought experiment. So that, and then you're getting, at the time, there was about a 4% return on savings deposits with banks. So if you combine that with a 2 or 3% deflation rate, you're at 6 or 7% real interest rates from a bank account, for heaven's sakes. So think about how many people would have got caught up in the housing bubble. Think about how many people that would be caught up in the dot-com bubble or any of the bubbles that we've had. Or if you could get a 7% real rate of return on your savings if you just kept it in a bank and just did nothing with it. I mean, that's a total mind shift for society at large. I go back to, well, let's go back to what we were talking about with the measurement of wealth being goods and services that society produces. When I was growing up in the 70s and the 80s, when you're talking to your buddies about ways to get rich, it was always, well, yeah, you got to go out there and work your ass off. You got to work 80 hours a week. You got to start a business. You've got to create some good or service that people value more than the money in their back pocket. That was always, even as a 12-year-old, when you're talking to your buddies about how to get rich, that was the core of the conversation. It was never, ever about, oh, well, my gosh, I'm just going to invest in crypto, or, oh, I'm just going to invest in gold for that matter, or I'm going to invest in real estate, or I'm going to invest in the stock market. That's how I'm going to get rich. Nobody ever, ever, ever said that. It was all about, it revolved around producing more goods and services. You see? So and now we've gotten to a point where the Fed has pushed everyone so far out the risk curve that the only way, and they've distorted the economy so much that the only way to actually get rich is to, not the only way, but the fastest way for sure, or the most proven way as of the last 10 years, is just to gamble at the casino that is Wall Street. And you see, that just distorts the mindset, and it distorts everything to such a great degree that that who knows where this goes. But you know, I'm going off on tangents here, but it's just like
George, we love it. We love it.
Yeah, you look at quantitative easing as an example, and QE1 was never supposed to be QE1.
Yeah,
it was supposed to be QE. And all of a sudden it was 1 because we came out with a 2, a 3, a 4, a don't call it QE, and now a QE infinity. Why is this? Because the economy gets addicted to a monetary heroin. And I think I use that analogy, you know, Schiff started using that. I think it's a great analogy. And it's the economy has been on heroin for a long time due to quantitative easing. And now we're just giving it more and more heroin just to stay alive or get the same effect as you were getting before. And at some time that kills the individual, the drug addict, right? Now, who knows when that time is, but it'll definitely be coming in the future. And that's where you circle back to gold and silver for a variety of reasons. Number one, because if you've got an economy or a drug addict that's addicted to the heroin, you have to give them more and more and more and more and more. Well, if you've got an economy that's addicted to the monetary heroin, then the same thing. You have to give it more and more and more and more money or currency.
Is there a way out of this, George? I mean, the Fed just keeps, you know, they're officially they say 120 billion a month, but if you look at the numbers, they're actually doing way more than that per month right now. Do you see a tipping point where the more money they put in, the less impact they're seeing in the economy? Is there a point where they change the strategy, or they just can't? They're in a trap at this point. They can't change the strategy. They can't pull the plug on this. Otherwise, it would just all implode.
Well, they can change. Yeah, they can change the strategy, but it would implode. I mean, it's the Austrian business cycle stuff where you've got to get the malinvestment out of the system. You gotta flush it, and at some point in time you have to take the medicine. It's just we're kicking the can further and further down the road, which means that the economy is going to go through more and more pain when it eventually gets flushed out. Now the question becomes, does it get flushed out in an inflationary bust or a deflationary bust? And it's just it's a matter of probabilities. I would say that the probability is high that it gets washed out in an inflationary bust, but there are very good arguments on the deflation side. I mean, Snyder's got a great argument. Dr. Lacey Hunt has a wonderful argument that really helps paint a clearer picture on the true picture. You know, I had a conversation with Bill Fleckenstein, and this was a question that he's been raising to a lot of individuals on his podcast regarding the situation in Japan and a debt jubilee. Because you see, the central bank there, the Bank of Japan, owns like 60% of the JGBs, the government debt. So if there's only 2 balance sheets involved in the equation, what would happen if someone at the BOJ just woke up one morning and just hit the delete button on the 60% of JGBs? Because you're only affecting the balance sheet of the BOJ and the government. And would anyone even know? How would you know if you're a Japanese citizen going down to the local coffee shop and getting your donuts and your coffee in the morning? How would you know if it wasn't made public that they just wiped out call it, I don't know, $10 trillion or whatever it is in debt, and it didn't exist. You wouldn't know, right?
Yeah.
So Bill has tried to think, well, what happens to the currency? What happens to the bond market? What happens to all these things? But there's really no good answer. And then I talked to Steve Keen about it as well. And he says, well, based on his model, and obviously, that doesn't include human psychology and whatnot, but he's like, nothing would happen. It's just, you're just two balance sheet transactions, and that's it. It's simple accounting. But the point, and I've given this a lot of thought, it's not about the damage that would do in the future, because there is no free lunch. We know that for sure. The damage has already been done. And if you listen to Dr. Lacey Hunt, he articulates this beautifully. That the damage was done by the government spending the money to get up to 250% of debt GDP in the first place. Because when the government spends money, usually, 90% of the time, it's misallocating resources. It's distorting the economy. It's creating malinvestment, which makes the economy more sluggish, less dynamic, and less productive. Mm-hmm. I was on a podcast the other day with a kid called Meet Kevin, and we were talking about the debt jubilee, and he's like, yeah, but Japan, it hasn't been that bad. Isn't that okay? Because what the government did, it prevented this big crash. And I said, yeah, but it goes back to what Hazlitt teaches us. It's not about the seen, it's about the unseen, right? If Japan would have just gotten all that malinvestment out of the system and done a United States in the early 1920s, remember that depression that no one ever talks about? The one where the government actually reduced spending, they raised interest rates, and we did have an actual V-shaped recovery in, call it a year and a half, 2 years. That's what most likely would have happened to Japan back in 1990, but instead they kicked the can down the road. So my point is, we can see what happened to Japan. Yes, they didn't have this huge economic bust. It was all in their asset prices and whatnot that just gradually kind of went down. And you now have all these zombie companies and kind of an economic malaise. But the point is, what would have Japan done if they would have just taken the medicine? Who knows? Japan could have been the largest economy in the world right now. They could be eating China's lunch. They could be eating our lunch. We just don't know, because we have to think through what's the unseen, not just what's right in front of our face. And so, again, my point is that the price that Japan paid for that, what results in a debt jubilee, all that government spending, is the lack of economic growth that their society would have enjoyed in a higher standard of living over the last, now almost 30 years.
Yeah.
Or so.
30 years, yeah.
Yeah, that's what we have to understand. It's, and to go back to the heroin analogy, that's the best way to think that through. You look at a drug addict, you give him a credit card for $100,000, $100,000 limit, let's say. And the drug addict uses the $100,000 credit card to buy more and more heroin, getting more and more addicted to the drug, destroying their mind and destroying their body in the process. And then when they've maxed out their credit card, let's say that we come in and give them a debt jubilee, that we wipe out all the debt. Is that heroin addict any better off? No, because the damage has already been done. As a matter of fact, they're worse off, because now they're just going to take that additional $100,000 of purchasing power, and they're just going to buy more heroin.
No doubt.
Which is going to get them closer to their eventual death. So, and it's the exact same thing with the economy, with government spending, whether it's in Japan or whether it's in the United States. So when people see this $4 trillion in stimulus, and everyone getting a $2,000 stimmy check or UBI, whatever it is, they think, oh, well, how can this be a bad thing? Just giving poor people money, that's got to be a good thing. No. You're not thinking through the analogy I just gave you of government spending and the monetary heroin and creating that same effect with the economy. You may have a short-term sugar rush right now, but eventually society is going to pay the price, because there is no free lunch.
We had Ben Alden on a few weeks ago, and we spoke about this exact same topic of, remember, we used to actually have recessions, and that was the time when all of these bad debts and bad companies just went under, and it was good. It just cleansed the system, and that's a healthy part of the economy. And we've been
secure.
Yeah, that's secure. And in the past, I don't know, since 2007, we seem to just have this attitude that we can't have recessions anymore, and that's just, I don't know when this happened really, but.
Well, that goes back to
I'm in my late 40s. I remember recessions used to be understood as, that's just part of the process. It's healthy.
Yeah, that's right. That's right. And it's Jupiter's creative destruction. And, now we're not letting anyone fail. And it's like this, we're raising kids with helicopter parents, and we're trying to do the exact same thing with the economy, to where you never want to see the economy or a kid feel any pain, and it's the same thing. But I think further insight there that I never really thought through until my lunch the other day with Snyder is, he pointed out the system and the central bankers around the world figured out in maybe the mid 90s or so, or remembered the extent to which the euro dollar system actually mattered. And they started to really, were more cognizant, let's say, that the banking system, the commercial banking system, actually controls the dollar. The Fed doesn't control the dollar. The Fed tries to make you believe they control the dollar. But if left to their own devices, they don't have anything, they don't control anything other than bank reserves, the base money. And that really doesn't filter out into the economy. That doesn't create more currency units chasing goods and services. Now, if the banks take an action based on quantitative easing or increasing bank reserves, well, that's another story. But I'm talking about the central bank in and of themselves, what they can do, or according to the Federal Reserve Act. And so who knows, that's going to go bye-bye, I'm sure. But regardless, it's up to the commercial banking system to create new additional money supply, which, when you've got an economy that revolves around debt, asset prices, and confidence, you've got to have an increasing money supply. That money supply shrinks, you're going to have some big problems, right? So the central planners, I think Snyder was saying that they were more cognizant of this in the mid 1990s, that, hey, you know what? We'd like to think that we control the dollar, but we don't. It's the commercial banks. They're the ones that control the supply of dollars in the system. And that's why, in Snyder's opinion, when we had the GFC in 2008 and 9, that they came in and bailed out all the banks as fast as they possibly could. Once Lehman happened, they're like, oh, no, we can't do that. Someone got in Bernanke's ear and said, hey, buddy, no, you let the banking system go down and the dollar crashes, or the dollar crashes, the whole economy, everything fails. So that's why today and moving forward, you'll most likely see the central planners try to protect the banks at all costs. I noticed one thing, I don't know if you guys, I don't know where I was reading it, but you guys wanted to talk about central bank digital currency. And that could be another reason why they're trying to promote this so much, and why I believe that that's kind of a foregone conclusion. There's no certainties, only probabilities, but I think the probability is very high that we'll have a central bank digital currency within, call it 5 to 10 years, because what that does, and then of course, then they're going to have to basically abandon the Federal Reserve Act, but they've got to, in Dr. Lacey Hunt's terms, turn bank reserves into legal tender, right? And a central bank digital currency is the first step in doing that, but that would take the power and the control for new money creation pretty much away from the commercial banking system, and give more of the power to the government and the central bank, which people believe are in control of the dollar. And then, I think that that's might be one reason why Buffett sold a lot of his banking shares that he's so well known for holding, is because he kind of sees the writing on the wall. Maybe he's studied, I know he's not a macro guy, but he gets a little bit of macro from time to time. And he probably saw, okay, wait a minute here. The Fed and the government need to take control over creating new dollars, new currency units. Right now, they understand that's the commercial banking system. Therefore, they're going to try to kneecap the banking system to take over control over new debt creation. And that ain't good for a commercial bank. It's making money on lending.
Hey, George, this has been golden material. I really want to thank you we've gone way, you promised us 30, 40 minutes and we've gone an hour, and I just love it. I'm going to break this video up into part 1 and part 2 probably when we upload it to YouTube, but this has been wonderful. I really want to thank you for spending an hour with us and just sharing all your thoughts. And, let's talk to you again in a couple of months and see how things have changed and just go on this conversation again. This has been wonderful.
Yeah, sounds good. I appreciate you guys having me.
George, thank you so much.
Awesome. Thank you, everyone from the Wall Street Silver community. Again, George Gammon, thank you so much for joining us, sir. Take care, everyone.